Good morning and welcome. It's my absolute pleasure to have you today to talk you through NCC Group's full year results for the year ending 31st of May 2020. So in a minute, I will take you through a brief overview. I will then hand you over to my Chief Financial Officer, Tim Kowalski, who will go through the numbers. And then I'll come back to talk to you a little bit more about our strategy, how we're getting on and where we're going next. And so with no more ado, I think we should get straight into the presentation. The one thing we know from all of the chaos and tumult that COVID-19 has inflicted on the world is that the cyber resilience market is more important than ever. The diagram on the right-hand side is something I've spoken to people about before, and it just highlights the secular growth drivers of the cyber market. Number one, the number of things, the number of connected devices just continues to grow year on year, ignoring the pandemic. That's about smart cities, it is about the Internet of Things, it is about intelligent transport, and that is a trend which is set to continue. In the COVID world, which I'll touch on a bit more in a moment, it's the proliferation of remote working, it's the rapid adoption of cloud technologies. And of course, it's become increasingly apparent that society is more and more dependent on this connected environment to get along. But of course, whilst that's happening, there are more and more bad actors out there seeking to take advantage of the vulnerability and the threat that all those connected devices represent. So the threat just continues to increase. And lastly, but really importantly, the regulatory environment is bounding along trying to catch up. And of course, as regulation increases, so do the consequent costs of compliance failure. And it is these four drivers that has driven the growth of the cyber resilience market and will continue to do so for many, many years to come. So all through the challenges that we've all experienced in the pandemic, cyber resilience is more important. We continue to see online security breaches going up and up. And of course, the shuddering financial impact on so many companies has brought the resilience of their software supply chains and other supply chains right up to the front of mind, which has driven direct benefit into our software resilience division. So in this landscape, I'm delighted to say that NCC Group has shown itself to be a growing and resilient company. I'm here to talk to you with Tim today about a set of results that I'm just thrilled with compared to what we feared might turn out back in March. So in these uncertain times, the recurring high margin, sustainable cash flows generated in particular by our software resilience division, but also increasingly by our managed detection and response offerings in our assurance division are just so important, and we value them so much. We're also privileged to have been chosen to support some of the largest, most important organizations around the world. It represents a quality customer base who are able to pay, and even in difficult times are absolutely aware of the need to protect their reputation. And all of that has us coming through these difficult times in good shape, well positioned to thrive as the leading provider of cyber resilience services. So let's talk a little bit more about the impact of COVID. And there's some good here and there's some which is more challenging. So the good, I think, is fairly obvious. We've all been driven to work remotely to an extent that we would never have dreamed of before. Some companies have accelerated in the space of months digital cloud adoption programs that would otherwise have taken years. And of course, those rapidly implemented programs, the sheer spread now of the way that we're working has massively increased cyber risk. Pulling on the rope in the other direction are some of the logistical challenges, the financial challenges, and indeed the general uncertainty that many parts of our customer base are facing today. And quite understandably, certain segments have chosen to deprioritize cyber risk as they worry about other things. But here at NCC Group, we absolutely believe that this is just building up a well of compliance debt that has to be paid down if those firms are to operate safely for years to come. And as the economy normalizes, we expect to see a continued bow wave of demand as people have to pay down that compliance debt. And so overall, here we are, well placed. We've come through this challenge with a strong balance sheet, well positioned to capitalize on further opportunities as they arrive. I'm delighted to say we haven't had to furlough or make redundant any employees because of COVID. we've deliberately acted to preserve our technical capability and capacity so that we have the ability to meet demand as it springs back. And indeed, we've taken advantage of this time to continue to invest selectively to enhance our proposition and to better serve our customers around the world. And so here we are. Tim will give you a detailed tour through the numbers in just a moment, but I'm very proud to be announcing a set of results here that exceeds what we believed we could do back in March. And in particular, I'll touch on the flat half two to half two performance that was delivered by our software resilience business, heralding a return to sustainable growth in the future. And secondly, an almost 14% growth performance from our managed detection and response business. That is something which has grown nicely over the last few years. We intend to continue growing that strongly over the coming years, and it will form a greater and greater, more and more important part of our cyber resilience offering. We've certainly been hit by COVID-19. We estimate that impact to be around £15 million of sales orders, but we are hugely encouraged by the way we've managed to weather what was a completely unpredictable scenario. And we've done it with a strong balance sheet and preserving our technical capability and capacity. Looking forward, I'll give you a more detailed outlook statement towards the end, but it's fair to say that there is a broader than usual range of outcomes for this coming financial year, which straightforwardly depends on how quickly and when our customers' buying patterns return to normal. But nonetheless, in the medium term, our outlook remains the same as it did previously: double-digit growth in assurance with margin improvement and returning software resilience to sustainable growth. And finally, the way that we have weathered this initial storm gives us confidence. It gives us confidence in our continued profitability and our cash generation. And thanks to that, we're recommending that we continue to pay an unchanged final dividend. So that's all from me on the intro, and I'd like to hand over now to Tim for a canter through the numbers. Tim.
Thank you very much, Adam. Good morning, everybody, and I hope you are all well. I am very pleased today to be presenting these robust financial results for the group in these especially uncertain times. So I'm now going to dig into the figures and take you through the detail. So looking at the financial summary, you can see that we've had continued growth with a strong balance sheet, and we are very well placed to thrive in the future. Our turnover has gone up to 264 million, which is a 5% increase, in spite of the estimated 15 million impact from COVID that you see on the slide. Our gross profit has enhanced by 2.6% to 104 million, and this is on a lower gross margin as we have retained our talent, as Adam had mentioned before. This leads us on to an EBIT of 31.1 million, which is below last year, but is higher than market consensus. When we then look at cash conversion, you can see the real cash strong discipline that we've had going through and is sustained, with 109% cash conversion and the debt dropping £16 million to £4.2 million, which again demonstrates our ability to manage our working capital. Moving on to the P&L, you can see that we have got that increase in growth of revenue, 5.2% in spite of COVID. And our gross profit margin has come down, but that's because of the retention of sales and technical capability to meet the strong demand beyond the current disruption. Then the 31.1 million EBIT is 13% ahead of market consensus. Within this figure, we have an overhead increase of just over £5 million, which I analysed here on the slide. You can see there's a like-for-like increase of overheads of just over £1 million, which is in line with inflation, so it's well controlled. We have a further increase of 3.3 million relating to the SGT systems part, which is going live and will be finished this year. And then we have onerous property cost of 800,000, which used to be put below the line and we've now put it above the line and relates to some onerous leases that we have. In terms of other items of note, you can see that we are implementing IFRS 16 as required, and we've done the conversion within the RNS, and you'll see that as a table for the go-forward position. We also are flagging up that we are going to have no adjustments going forward below the line, so it will all be included within EBIT. And pleasingly, this year we've had no individual significant items. So overall, we're cleaning up the accounting to make it more standard and normal practice. In terms of constant currency, we've had an adverse impact on revenue of just over 1%, and on adjusted EBIT, it's gone down by 1.4%, which represents those higher overheads that we've retained, as Adam mentioned before. Moving on then to assurance. Assurance demonstrates our global approach of managing the portfolio across the world. When we look into the regions, you can see that from a revenue perspective, the UK has increased by 2.9%, but was flat in the second half because it had the most significant impact from COVID-2, from which we're now starting to see some recovery. In North America, it's up by 9.1%. That had a delayed impact from COVID as the pandemic reached there later, and it's also been protected by its large technology sector customers, which have done quite well during this uncertain time. Europe and APAC have increased by 8.5%, and again, it's a reflection and a testament to the resilience of their managed services and their high assurance business that they have within their divisions. Looking at profitability, gross profit went up to 77 million in this area, with a gross margin decline of 0.6 percentage points as we retain those technical and sales staff. Utilisation dropped 7 percentage points from 78 to 71, but as you'll see later from Adam, we put a lot more research days in with that non-utilised client-facing side. And the additional overheads are marketing and support costs to enable the growth of the business. Looking at assurance in more detail now, you can see that, as we mentioned before, we are really looking at the diamond core of our technical consulting, and we are strengthened around that. And the technical security consulting area is the area where we have world-leading capability of breaking into almost any systems. And by doing that, we are protecting our clients. There's been resilient growth here across the geographies, even though there has been mainly felt the COVID impact within this area, and the average order value had pleasingly increased by 17% compared to the previous year. Allied to our technical security consulting, we have managed detection and response, which is where we are predicting and protecting against clients getting future attacks by spotting them before they come in. And in this area, we've really grown strategically, and we're looking at to scale up to get longer duration of contracts, providing larger order values with greater recurring revenues. And sales orders in this area have grown by 24% in the full year to 62 million. So it's becoming a much more important part of our business. Risk management consulting, this has decreased across all geographies and is really a question of simplifying our route to market and tying it more into the diamond core of technical consulting. What's happened in the past is we've tried to compete with the other large consulting areas independently and not really managed to our strengths. So that's where we're returning to that simple route. Products is a small area, has grown a lot, and it's mainly in the Europe and APAC area. Moving on to software resilience. This was formerly known as escrow and really has this recurring high margin revenue and very high cash conversion, which has really been one of the resilient features of our business during the COVID pandemic. That has grown in terms of the individual areas in half two, where the momentum has been flat across the half. So within the UK, it has grown by 2.3%, and this is the largest element of our business, and it underpins and heralds that return to sustainable growth, as Adam mentioned. In North America, we were down by 6%, and that was because we had a lower impact of, we had more of an impact of COVID here, because verification in terms of physical verifying of secure discovery articles has been impacted. And so that has impacted our insolvency work and other work in this area. Europe and APAC is a new market and has grown by 2.7%, which is really good. Renewal rates have stayed at the historically high levels, around 87%, and it was within our expected range. And within profitability, you can see that the increased investments we've made in sales, in operational management, and the new channels that I'll mention has really impacted the profitability in terms of margin, but will be a long-term investment for the future. And we've retained also verification testing, just like we've done in assurance, for that talent for the future demand as well. The other exciting areas within software resilience is that we've now formally launched our partner program to independent software vendors, and we're looking forward to that growing at a good rate. We have co-developed with Microsoft Azure a digital vault, which has enabled global companies to use multi-jurisdictions and put them into virtual vaults in a very simple fashion. And then we've increased our investment in our sales leadership in North America to help turn that round and grow it going forward. Turning to escrow software resilience, in terms of its component parts, its contracts and verifications. Within contract, COVID's had a negligible impact on contracts, and the contract revenue is now stabilised, as been mentioned, which is very pleasing. In verifications, that's continued to grow despite the lower volume in North America, and there's more of it now is under contract than was before, which is a good sign. Escrow as a service, which is escrow within the cloud, is gaining momentum. It's had a strong traction with high-profile client wins. We've had 1.2 million of sales, and it's turned into $500,000 of revenue. And we have some notable wins, including Vodafone, BT, Barclays, and HSBC. So, last but not least, cash. I'm pleased to say that we've really had strong cash discipline, and those working capital techniques that we've used over the last couple of years have been sustained and carried on, and enabled us to reduce our debt by 16 million down to 4.2 million of net debt. This does include the 4.6 million of certain government tax deferral programs. But even so, even without them, we have a cash conversion of 109%. And I was asked if we could maintain this last year, and I said we couldn't, and we have. But I am expecting it to normalise at around 85% over the medium term. I'd just like to highlight as well that we've drawn down fully on our RCF to give us maximum cash flexibility, but this has no impact on our net debt. In terms of free cash flow, net cash flow from operations has increased by 5% to almost 42 million. And in terms of SGT, we have now got a project implementation cost, which has slightly increased to 23 million. And there is an annual increase in system-related expenses, which we expected, of 3.5 million. And you can see within the CapEx line, the CapEx element has gone up this year, as predicted, up to 13.2 million. And we will be finishing all the systems within part of SGT within this calendar year. Now moving to capital allocation, you can see that we paid the dividend in line with policy of almost 30 million in the year. We are recommending an unchanged final dividend of 3.15p because of our balance sheet strength and our robustness and resilience in times of uncertainty. This will also give us a fund for inorganic or organic growth going forward. And with that, I would now like to hand back to Adam, who will give you all the information about our strategy and the outlook. Thank you very much.
Back to me now, and a little chat about our strategy, how we are getting on with the transformation of our firm, and where we are going to go next. Now, the robust set of numbers that Tim has just shown you, all show that, unlike some, poor, tragic businesses out there who are wondering whether their business models are still relevant or whether they have to completely reinvent themselves in this new world in which we're all living. I'm pleased to say that NCC Group, remains on the same course. Our market is more resilient than ever. Our long-term prospects are stronger than ever. And in that context, our destination remains current. We are confident in our trajectory. So just to remind you, our mission remains the same: to make the world safer and more secure. Our vision remains the same. It is to be the leading cybersecurity advisor globally, trusted, sought after for our complete cyber resilience solutions. We want to be the experts in cyber so that our customers can just get on, make money and thrive. We will take away their cyber problems. Over the last couple of years, we've been binding NCC Group together to be one powerful powerhouse. And the way we do that is by resting on our values. We work together across geographies, across technical skill sets, but crucially with our customers as well to solve their problems. We want to be brilliantly creative. That is the spark of brilliance that underpins our distinctive capability. And crucially, we embrace difference. People are welcome in NCC, and indeed it is that difference, the way we use technology differently, which is at the heart of our ability to break into systems, to uncover vulnerabilities, and ultimately to generate value. Our objectives remain the same. For our shareholders, it is double-digit revenue growth and margin improvement for Assurance. It is to return software resilience to sustainable growth, and all the way generating cash in a disciplined, sustainable way. For our customers, we want to use our unique data, our capability, our insights to help them meet their cyber resilience needs, so that we can take away their cyber pain and they can get on and thrive. And finally, but crucially, to provide a wonderful environment for our people. In the cyber world, where there is a voracious war for talent, we cannot hope to hire everybody and keep them for eternity. Instead, we want to be the hub for cyber talent, a place where people can come to get a great experience, to get some learning, to go off, do something wonderful, hopefully perhaps come back and join us again for a few years later on in their career. And crucially, and something which we have re-energized after the events of the last few months, is creating an inclusive environment where everybody feels safe, can be authentic, and we have a population which is representative of the diverse world in which we live and in which we operate. Now, as we realize that vision in line with our mission, we have our transformation program, Securing Growth Together. You've heard me talk about it for the last 18 months, 2 years or so. And I'm delighted to say that I don't want these results to be all about COVID and the way that we've handled it. I also want to draw your attention to the fact that we have continued to relentlessly transform this business, to release the potential we all believe sits within NCC Group. We have increased our headcount. Our attrition rate has gone down. Our ability to retain technical staff, our key distinctive capability, has gone up. We every year do an employee engagement survey with a company called Best Companies, and we are in the one to watch category, and that's something we look forward to evolving, improving further over time. The way that we are able to stay leading in this ever-changing cyber market is through research. And happily, unlike those firms that have to spend tens or hundreds of millions of dollars on the next product, on the next thing, we are able to fund our talented colleagues to do a little bit of work here, a little bit of work there, researching the next technology, understanding how to break it, what its vulnerabilities are, educating our client base, and in so doing, staying at the forefront of the cyber market. I talked to you earlier about wanting to work together with our clients, providing complete solutions. And one of the ways we look to see if we're succeeding is through our average order value and whether the number of large orders we're capturing is going up. And I'm pleased to say here that the number of orders over £250,000 is up to 144, an increase of 57. So the main takeaway I'd like you to have here is that it's not just about the pandemic, okay? We continue to evolve NCC to make it stronger and to fulfill our potential. However, COVID is a thing. And we realized back in January when it first hit some of our Asia Pac operations that there was something quite powerful coming down the line. And so in February, we stood up a full-blown crisis response team. We went in with two specific objectives. Number one, maintain a strong balance sheet. We didn't want to come out of whatever was ahead like a zombie, just paying down the debt. No, we wanted to come out in a position where we could capture whatever opportunities were ahead of us. And secondly, we deliberately made decisions to hold on to the capacity and capability in sales, in delivery, so that we had the ability to service our clients as demand comes back. And underpinning those two objectives were 5 very clear strategies, and here they are. Number one, anticipate and measure. It wasn't clear how the world was going to evolve, so we built scenarios and, using our new systems, were able to track every day how we were evolving and make decisions accordingly. 2, be resilient. What started off by tracking cases, managing offices, soon transformed into shifting everybody to work remotely, something which happened unbelievably seamlessly, and I'm absolutely delighted and thrilled in the way that happened. 3, straightforwardly, stay profitable. And plans A, B, and C there were to sell. The more that we could stay operational, the more we could continue to deliver value to our customers, the better we would be in control of our own destiny. 4, exploit the downtime. Having taken the decision to hold on to all of our capacity, we knew we would have a little bit of downtime. And so the call went out to everybody to make the firm a little bit stronger every single day by doing something, whether it was research, whether it's development, whether it's building tools, whether it's helping to refine our new systems, whatever it was, exploit the downtime. And finally, prepare for the bounce back. And all that, has left us today well placed to take advantage of future market growth as and when the economy properly normalizes. I'm delighted to say that the investments we've made over the last couple of years enabled us to move seamlessly to remote working in a way which exceeded every expectation I could possibly have had. So what a wonderful underpinning, a strong foundation for us to stand on. Our global approach, which we've increasingly put in over the last couple of years, allowed us to better serve our customers. A lovely example here, an appliance which we internally call Firebase, which came out of some research a few years ago in the UK. It allows us to operate remotely. It allows us to work inside our clients' networks and do vulnerability testing in a way that couldn't be done otherwise. Is something we were able to roll out right across the world. Our client base is more robust today than it's ever been. We have 65 of the Fortune 500, up from 52 last year, and have 89 of the FTSE 350. Our NPS, our Net Promoter Score, is incredibly strong for a business services firm of our type, and you can see some of the logos this year for whom we've done important work. Sales orders up, and indeed underlying recurring revenues and cash flows, which I've highlighted before, from software resilience and increasingly from managed detection and response, are up and have given us more underlying strength. So as we look to the future, we're not finishing. The cyber resilience market is more important than it's ever been. The timing, the speed of the economic bounce back may be a little uncertain, but we are preparing ourselves to be able to deliver more services to more clients in more places around the world in the future. So number one, we're broadening and strengthening our portfolio. A few things I would call out is the new security improvement and remediation services that we are developing and launching. That's all about our ability not just to go into clients and tell them where their vulnerabilities are, but also to help them to become resilient, to become secure. 2, we want to continue to scale up our managed detection and response service line, which is getting such a wonderful reception in the market. And 3, continuing to accelerate the adoption of our escrow as a service cloud resilience proposition. Secondly, we're going to work intensively with our sales teams. We want to optimize our route to market so that we can deliver the full spectrum of what we have to offer to every client, wherever they are in the world. And 3, we want to continue to embed our values and create a wonderful place to work, which attracts the best, the brightest, and continue to be the global hub for cyber talent. And finally, as you're aware, we've invested a lot of money and time in our new systems over the last couple of years. The final ones will be dropping in over the course of this financial year, and we will be refining those to ensure that they deliver improved efficiency, improved user experience, and are the backbone of our operation. And that takes me then to a quick look ahead and summary. So today, we've just about finished our first quarter, and I'm very pleased to say that Q1 trading is ahead of last year, although last year was a fairly soft prior year comparator, and we have had some exceptionally wonderful M&A support engagements that I would say have boosted our assurance business. Our escrow business is flat year on year, so again, holding the line that we first saw drawn in H2 of last financial year. In the short term, the environment remains challenging. It is true to say that parts of our customer base are facing uncertainty, continue to be impacted by financial pressures or logistical issues. We've seen, therefore, some procurement cycles lengthen and become less predictable, which means that there are delays and postponements, in particular in some of the more affected sectors, such as leisure and entertainment. So we've had a good Q1. We look forward with some uncertainty, but nonetheless, we remain resilient, we remain profitable, and we are cash generative. And so overall, we're delighted with the way that we've navigated the first part of the COVID disruption. Our transformation continues with good effect. Our full year performance demonstrates the resilience of our business and means that we are in a great position for future growth. The underlying recurring business from software resilience and also from MDR is an increasingly valued part of NCC Group. In the long term, cyber resilience and our services are more relevant than ever, and I'm delighted that we've come through the first period of COVID with a strong balance sheet and with the capacity that we need to be ready for that growth. And so looking forward, yes, we've had a wonderful Q1, but the range of outcomes this financial year is dependent on how quickly and when our customer buying patterns return to normal. The medium-term outlook, though, remains the same. We will deliver double-digit growth in assurance with margin improvement, and we will return software resilience to sustainable growth. And thanks to the confidence we have gained, managing our way through the first part of COVID-19 and the continued profitability and cash generation we have shown, we're recommending that we continue to pay an unchanged final dividend. And with that, thank you very much. And Tim and I look forward to joining you a little later today for some Q&A. Thank you.